Hey everyone, welcome back to MarketSnap. Walmart is one of the most watched stocks on the planet right now, and after a brutal pullback, everyone's asking the same question. Is this a falling knife or the buy of the decade? We're plugging it into MarketSnap's fair value calculator to see if the growth is actually priced in or if there's finally a margin of safety. Let's dive in. So let's set the stage here. Walmart has been a massive winner over the last 5 years, up over 110%. But the last few months have been brutal. The stock is down about 16% over 6 months, and over the last month, it's shed another 3.5%. The market is clearly worried about something, and we need to figure out if that fear is justified or if it's creating an opportunity. For anyone who's been living under a rock, Walmart is the world's largest retailer. Founded back in 1945 and headquartered in Bentonville, Arkansas, this is a company that needs no introduction. They operate discount stores, supercenters, and membership clubs across the globe, employing over 2 million people. It's a true behemoth in the consumer defensive sector, and with a market cap sitting north of $840 billion, it's one of the most important companies in the entire market. The current CEO is John Furner, and they've built a moat around everyday low prices that's incredibly hard to replicate. Let's talk about the revenue engine, because that's where the story gets interesting. In the most recent fiscal year, Walmart generated over $713 billion in revenue. That's not a typo. Now, the way they break it down, Walmart US is the crown jewel, contributing roughly $483 billion. Walmart International adds another $130 billion, and Sam's Club, their membership warehouse arm, chips in about $93 billion. What's really exciting is what's happening underneath the surface. The market was a little disappointed by slowing in-store comps, but the growth drivers are shifting. Advertising, the marketplace, and membership fees are growing like crazy. That's the new Walmart. And that's where the margin expansion is going to come from. Now let's get into the earnings, because the numbers are actually pretty solid. In fiscal 2026, Walmart pulled in nearly $22 billion in net income on a diluted EPS basis of about $2.73. That's up nicely from the prior year's $2.41. And if you look at the trend, it's been a beautiful upward march. Fiscal 2024 was $191. Fiscal 2023 was $142. They're growing earnings at a really healthy clip. The gross margin is sitting around 25%, and the operating income has expanded to nearly $30 billion. The market might be focused on the short-term noise, but the fundamental earnings power of this business is undeniable. Looking at the most recent earnings call, management was pretty upbeat, despite the stock sell-off. They highlighted strong constant currency results and talked about how they're winning market share, even in a tougher consumer environment. There was a lot of discussion about reinvesting in price to keep that momentum going, and they addressed the potential impact of tariffs, noting they have levers to pull. The key takeaway is that they're playing the long game. They're willing to sacrifice some near-term margin to keep customers walking through those doors and clicking on that app. That's a strategy that's worked for them for decades. Let's dig into the balance sheet and the cash flow machine, because this is where Walmart really flexes its muscles. They generated over $41 billion in operating cash flow in fiscal 2026. Free cash flow came in around $15 billion after some heavy capital expenditures. They're investing a ton back into the business, whether it's automation, supply chain, or those 3-hour delivery options that are rolling out nationwide. The balance sheet is solid. Total assets sit around $285 billion, and while they do carry debt, the interest coverage is manageable. They've also been returning cash to shareholders, paying out over $7 billion in dividends, and the return on equity is sitting at a very healthy 22%. This is a business that prints money. Okay, let's break down the SWOT analysis, because that's what everyone wants to see. Starting with strengths, you've got the scale, the pricing power, the supply chain, and that massive moat. They also have a dividend that's been raised for over 50 straight years, making them a true dividend king. On the weaknesses side, they're facing intense competition from Amazon, especially in apparel, where Amazon's share has doubled since 2019, while Walmart has lost ground. Consumer spending is also slowing down, which is a headwind for any retailer. Now, opportunities. The advertising business is a goldmine, and the marketplace is growing rapidly. Same-day delivery is becoming a battleground, and Walmart is right there with Home Depot and Target. And then threats. Tariffs are a real concern, and inflation could squeeze their core low-income customer even harder. The competitive landscape in e-commerce remains brutal. Let's look at the recent price action, because it's been a wild ride. The stock is trading around $106, down from its highs. Over the past week, it's down another %, and over 3 months, it's down over 11%. The one-year return is still positive at about 9.5%, but the momentum has clearly shifted. Wall Street's consensus target is around 128, which implies some upside, but the market is clearly pricing in some near-term pain. The question is whether this is a buying opportunity or if the stock needs to reset further. Now for the part you've all been waiting for. We plugged Walmart into MarketSnap's valuation engine, and the model that fits best here is a forward PE approach, with a DCF as a supporting check. Given Walmart's status as a mature compounder with strong analyst coverage and positive free cash flow history, this is the highest confidence setup. The model applies a sustainable multiple that reflects steady growth, strong margins, and moderate buybacks. But here's the thing. The current price is around $110, while our model puts fair value somewhere in the mid-80s. That's a gap of roughly 20%, meaning the stock is trading above what our model suggests it's worth. So what's driving that valuation? First, the model assumes free cash flow conversion at 95% of net income, which is a sustainable level versus the volatile historical average. Second, we're assuming a discount rate of 6.5%, reflecting Walmart's low-risk profile in the consumer defensive space. And third, we've got a terminal PE of 22, which is realistic for a stable retailer. The model gives us a fair value range of roughly $75 to $95, with a central estimate around 85. Now, these numbers swing a lot depending on your assumptions. If you think growth will be faster or the discount rate should be lower, the fair value moves up. You can run your own valuation on the MarketSnap intrinsic value calculator on the website and see how the number shifts with your own inputs. All right, here's my honest take on Walmart. This is a phenomenal business, full stop. The earnings power, the cash flow, the dividend history, the new growth vectors in advertising and marketplace, it's all there. But there's a difference between a great company and a great stock. Right now, the market is paying a premium for that quality, and our model suggests the stock is trading above fair value. If you're a long-term investor, you could do a lot worse than owning Walmart. If you put $10,000 in today, our model suggests it could be worth somewhere around $7,900 in 5 years under base case assumptions. That's not a great outcome, but it's not a disaster either. The key risk here is that the stock has been cratering, and there might be more pain ahead if consumer spending continues to slow. The key thing to watch is whether those higher margin revenue streams can offset the weakness in core retail. I'd be a buyer closer to that $85 zone, not at $106. What do you think about WMT? Leave your take in the comments below. Thanks for watching. If this helped you think through the story, hit like and subscribe for more stock deep dives. See you in the next one.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.